Good. Good morning, everyone. I'm Martha Stokes, Chartered Market Technician, and I'm going to share some ideas with you today to help you improve your profits and limit your losses. You're always going to have a periodic loss once in a great while. A lot of them occur because of mathematical errors and things like that. That's why we've developed some tools that you can develop that make it easier for you not to make those kinds of mistakes. We're going to look at MCHP today because it's got a lot of information in it. We're going to be focusing on the various market participant groups. We have several groups that are in this stock. And the first question you should always ask yourself when looking at a stock chart is who is in control of price? Which of the 12 different market participant groups, or maybe it's a combination. Usually when there's speculative runs, such as this one that just happened last week and today, that we have small funds managers with less than 5 billion assets under management. That is a small fund. They can be maybe 100,000, 200,000 family fund, all the way up to someone who is actually publicly traded. Those are not considered professionals. They are considered retail. Why? They don't have financial services degrees. They are mostly salespeople who work sometimes for your neighborhood broker, like Edward Jones. They don't understand technical analysis, and most of them think it's voodoo, which makes me laugh until I want to cry, because it tells you everything you need to know, including fundamental levels. Okay. And this is very important because we are going to have more of these flash crashes where suddenly an individual stock just goes down, and yet things were okay for this company. So why the heck did it go down? Well, HFTs, high frequency trading firms, are called maker takers. They make liquidity and they take liquidity, and they are paid a fee. A rebate is what it's called, a rebate from the stock exchanges to do that. And they are legal and approved by the SEC. They are professionals. However, there is nobody pulling the trigger that's a human. It's an automated program that searches for anomalies in order flows before the market opens. So anytime you have a huge spike in volume, blasting volume, you have HFTs acting before the market opens. And they're all over the country. And usually they're associated right with the exchanges. And so they key in with these huge plugs of energy and power so that they are trading on the millisecond. They can send uh, 60,000 orders in a millisecond. A millisecond is 60 decimals within a second. So it is very fast, and they can fill the queues within seconds, and they can supply either downside or upside liquidity. And that's their role. It's legal and it's necessary because without it, the exchanges would not have any activity at all, because everybody else, except for the small funds managers, retail, foreign funds, memes groups, chat groups, retail investors that invest for themselves, and odd lot investors are the only ones, and they only count for 20% of the whole market structure. 80% is underneath, hidden in the dark pools. So you don't see them, even though a lot of people think that they have seen a whale because they see a 100,000 share lot and they think, oh, that's a huge lot. That's not a large lot anymore. It starts at 1 million and goes up to 20, 25 million, a lot of times being bought from the company, as I've mentioned before. We have some interesting things going on, and this has a lot of HFT activity. We have tons and tons of spikes of volume, and we have a signal down here that is most important. This little indicator has a W. Right in the middle of this thing is just collapsing in April with the flash crash of April. And then all of a sudden it bounces up. Maybe you saw it going down. You thought, oh, it's going to go way down, and you took a big loss because you have all this volume. And smaller funds use volume weighted at price, so they accelerate the downtrend, which is a bad idea. So dark pools are sitting there waiting. Oh, this stock is way below its fundamentals. The neckline for this was right up here. So it's way below. So they buy, and they buy into the HFT activity and they push the price up. This is the only time you're going to see long candles with the buy side giants. Then we have some little dicey action going here because they stop, and some pro trader nudges and some gaps from HFTs, gapping it up, and it goes right to the neckline. And then HFTs discovered the dark pools have been in here for a while, so then they gap it up again, and then it gaps again on retail again and then settles in. So where the heck is our fundamental zone? It's always in the charts, girl. You don't have to go and look at the fundamentals. You can confirm if you want to with the fundamentals, but it's in the stock chart. What's so beautiful about stock charts, especially these with these nice indicators, that shows, yes, we have accumulation going on up here. Now we're tapering off a little bit and we're settling into this buy zone. This buy zone is a fundamental level. It is consistent highs and lows, and if the price pops above that, then they stop buying, and if it pops below it, they wait to see how far it will go before they push it back up because they want to strike the penny spread. They don't have a better advantage on price. That's all hoggy woggy that everybody hears retail news. You should really limit your retail news because it causes emotional reactions. It causes you to be misguided and often are told things that are truly false. So try to limit what you do there. I know it's fascinating, but we have another little dip here. Dark pools are going, oh, this stock, we've let it go, and this is about where the fundamental support level should be from this neckline. Anytime you have a flash crash, you're going to have a neckline. Anytime you have a neckline, you're going to have support that is stronger because that was the original place that should have had a support situation going on because that's where the fundamentals were at that time. So now it starts tricking up first by the dark pools just nudging it up and pro traders getting in the mix, and then these nice little run all controlled by buy side institutions and by pro traders. Now a bigger one moving up, and this nudge tickles the HFTs. Oh, they're in the stock. We're going to gap it up. And they gap it up. And then it runs up. Now it's slowing way down. Oh, why is it slowing down? Maybe you bought it here. Maybe you bought it here and you're hoping it'll go up, but it's not going up. Well, but yes, because it's hit its fundamental level. It's hit the highs of that. And they're not going to buy until they'll buy within this range, but they're not going to buy any further than that. So you have to understand the dynamics behind price action. The dynamics behind price action is who is in control of price. When you understand this and you understand how the candles all come together and formulate, and you have to start looking at these little nudges and these things that are going on that are very, very tight penny spreads. It used to be those weren't important at all. But now they're incredibly important because they tell you where the pro traders are. Oh, a little nudge and then a move up. Oh, a little nudge and a move up. And so this helps you, but this is gappy and it's not all white candles and it's bending, it's curving. Can you see how it curves around? We're getting above the buy zone, the fundamental levels. The fundamental levels are always going to be fairly tight based on the price cost of that stock. So it varies per thing. It's not a percentage, okay? It's based on the level at which the price meets the buy side institution's requirements for accumulation. And as it tricks back down, they may accumulate a little bit more, or they may say, well, we have enough shares of stock. There's over 101% institutional ownership in the stock. So the stock has opportunities to work on this fundamental level. And as fundamentals improve into the fourth quarter, then it could start moving up and even breach this resistance level of the previous highs. So this is something you need to learn and understand, that there's a dynamic action going on because 80% of the market activity you can't visually see intraday, but you can see it in the charts end of day when everything goes down and closes. So also follow the indicators. This is public. This is one of my public indicators, and watch for various things that can tell you that this stock has gone way beyond its fundamental values right here, and this is showing a decline, a little pop up and then more of a decline because it needed to get back into its fundamental levels so they would buy again. So when they stop buying, then this speculation hits, and you can see there's a lot of white and black, white and black, white and black. That's small funds managers buying and selling day trading. They love to day trade. They haven't gotten the memo yet that the professional side doesn't day trade anymore. I'm Martha Stokes, and that's my topic for the day. Thank you for joining me.